We got some massive news for stock market investors as the United States and President Donald Trump announced a trade deal with one of its largest trading partners, Japan. I'm going to talk over the details of that deal and what it could mean for stock market investors and why it's such great news for stock market investors worldwide, not just in the US and Japan.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So while the details are limited on this trade deal announcement, there are a few things that were announced. The deal will include a 15% tariff on Japanese goods coming into the United States. So, if you aren't already aware of what a tariff means, it's that if a US business is purchasing products from Japan or ordering products from Japan or bringing products from Japan, they will pay a 15% tax on the value of those products. So, if you're ordering $100 billion worth of goods from Japan, you're going to pay a $15 billion tax on that $100 billion import. So it increases the cost of the products that you're importing from the country. And in this instance, that's Japan. So it's the US business that will be paying these tariffs. However, it will make Japanese companies less competitive because they will face that 15% tariff. So as a US business owner, you're thinking about manufacturing products for sale to your customers, and you're looking at Japan as a potential place to manufacture your products, you have to now incorporate that extra 15% tax that you're going to have to pay to import those products. So now you might look elsewhere to import those products from, or you might look at domestic manufacturers to potentially replace your Japanese manufacturers. Now, I'm not sure if 15% is going to be enough to make that change where it makes US manufacturers more attractive to US businesses. Not on a large scale basis, I don't believe. However, on the margin, it will, right? If you were a business that was already, kind of thinking about this move, like, I'm concerned about importing products from Japan. I would like to source my products locally, but I don't know if I should. I don't know if I shouldn't. This extra 15% tariff on Japanese goods might push you over to make that decision to manufacture your products in the United States and therefore boost manufacturing in the United States. And the reason I talk about that is because that's what is the stated goal. One of the stated goals of this administration is to bring back manufacturing jobs in the United States, which I would say in the early stages, it remains to be seen if it's going to actually increase manufacturing jobs in the United States. On the surface, it might seem like it will increase manufacturing jobs. However, if you dig deeper and consider all the intricacies of our supply chain worldwide, it might not look like such a no-brainer that it's going to increase jobs in the United States. There are many jobs that are dependent on imports, and if imports are declining, then those jobs will not exist anymore. One of those jobs could be, for instance, workers at ports that are, processing these imports coming into the United States. I've read several reports here from Los Angeles and Long Beach how port workers have experienced a significant decrease in the hours they're offered for work. And then in those local communities where those port workers are experiencing a decrease in hours worked, the local restaurants, dry cleaners, and local businesses are experiencing big decreases in their revenue. So they're not hiring either. So that's just one instance of the implications of these policies where, yes, you might have an increase in manufacturing jobs, let's say in Ohio. That's going to come at the cost of port worker jobs and local economies connected to the imports in coastal areas like Los Angeles and Long Beach. So that's why I say it remains to be seen if the ultimate impact will be an increase in US jobs. That is still a question mark. Hopefully it is, but it's still a question mark. What is I think not arguable is that global economic growth will slow down. So the worldwide economy will experience a slowdown and there will be fewer jobs available in the world. Okay, if we think about the complete pie, that pie will shrink as a result of these increasing trade barriers. Because as we talked about, if you're paying a higher price to import these goods from Japan, you're going to reduce your orders, and we've already seen that imports from Japan have fallen uh, over 20% in the previous 2 months, right? Year over year, because businesses see these higher prices and they're like, whoa, wait a minute here. I don't know if I can still make a profit doing my business with these higher prices if I'm importing from Japan. So, included in this deal is a commitment from Japan to invest $550 billion in the US economy. Uh, I love how they always, and it's not Republican or Democrat, it's both. When they're reporting these kinds of things, they always neglect to include whether or not this is additional investment from what was already planned, because this may be something that was already going to happen anyway. And also, they neglect to include the time period. $550 billion might seem like a lot, but if this is over a 30-year time period, that's not very much in the grand scheme of things as a concession from Japan, because remember, they did receive a concession where previously the threatened tariff rate was 25%, and now it decreased to 15%. And this is especially important because this reportedly also includes cars, which is Japan's biggest export to the United States. And the cars will experience now a 15% tariff instead of a 25% tariff, which the US car companies complained about after this deal was announced, saying that, this now puts us at a disadvantage because we have 25% tariffs on a lot of the cars we're importing because the countries we're importing from have a 25% tariff, but Japanese car companies will only have a 15% tariff. So they were not happy about that. Overall, though, this is good news for stock market investors. And you saw several of the indices were up between 0.5% to 1.5%, because it reduces these risks from the trade barriers. It is a relief from the higher threatened rates, and an agreement is generally a good sign for stock market investors. It reduces some of the biggest downside risk, which is if there was no deal reached and then Japan retaliates against the US, and then the US accelerates the threats against Japan, and it can lead to a negative cycle that nobody wants to see. And so this reduces those downside risks. 15% tariff on Japanese goods is going to decrease business profits. It's going to increase prices on US consumers without a doubt, but it's less than feared. And so markets are cheering this news. And this is also an indication of future deals that could be signed with the European Union, which there was, as I was going to record this, there was a report out from Bloomberg that there's a potential deal in place with the European Union, similar to the framework with the deal with Japan with the 15% baseline tariff. So overall, as I've been reporting over the previous month or so, it looks like even if there's a deal like this one is reported, it still means higher tariffs, higher trade barriers for US businesses, which will have to pay higher prices, which they will then likely pass along to US consumers. And we will all have to pay higher prices for everything that we're buying. It's not just going to be everything we're buying from Japan and the countries outside. It's going to be everything that we're buying, because if a US business realizes now that they have less competition from importers and they can see an opportunity to raise their prices to make more profits, what do you think they're going to do? They're probably going to raise their prices too, because they realize, hey, my product is $100 cheaper than the next competitor. So now I can raise my price by $50, and I can still be cheaper than my next competitor, and I can increase my profitability. So from the lack of competition, US businesses will raise prices, and then from a point of necessity, importers, US businesses again that are importing product will likely raise prices as well. So this was a good news. Hopefully more deals to come, and trade barriers are not so extreme, and hopefully the worldwide economy can weather this storm, and the US economy benefits in an increase in manufacturing jobs to offset some of the declines in other sectors that are already happening as we speak. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.